I'm actually wearing my Elevate Mortgage Group shirt today. Normally I go live on Fridays, but we're trying something new today for our YouTube followers, anybody else that finds us on Google. Just quickly, Elevate Mortgage Group is nothing more than a DBA that we use here at low VA rates when we're dealing with civilians. So if you have not if you've not served in the military or do not have VA home loan benefits, please keep listening, because we can still work with FHA, conventional, USDA, all the other loan programs out there. We can help you here at Low VA Rates through our Elevate Mortgage Group platform. Anyhow, today we're going to talk about how you can pay off your mortgage faster. And again, I will focus primarily on veterans, but we can do this with all loan types. I'm not a veteran. I love the military. I have a conventional loan, and these same keys or tricks or suggestions apply to me as much as they do anybody else with a VA loan out there. So, probably the number one way to pay off your mortgage faster with low VA rates is through a VA refinance. Okay? A lot of times we refer to the IRRRL, IRRRL, which stands for Interest Rate Refinance Reduction Loan. Okay? Any type of refinance is for sure the fastest way to pay your mortgage off quicker if you do something simultaneously with that refinance. Now, if you're going to go pull out a bunch of equity, which a lot of people are doing right now, and pull out cash from your home, of course that's going to increase your balance, and it's going to extend, in all likelihood, the time it takes you to pay your mortgage off. So what we're referring to today is just a simple refinance where you get a new rate and you lower the term. Lowering the term is the real key to paying your mortgage off quicker. And yeah, you can do that without refinancing. That's absolutely true. You can just start paying your mortgage faster, which we're going to get to in number 2 here. But by taking a lower term, we prefer somewhere between 20 to 15 years. If you do that, you're going to save, in most cases, hundreds of thousands of dollars in interest, because you're forcing yourself to pay your mortgage off quicker.
Justin wants to know, can you approve loans in North Carolina?
Justin, yes we can. And by the way, I'm glad there's people chiming in today. Please interact, ask whatever questions you want, because that really makes this this situation go by, I shouldn't say it goes by quicker, but it makes it more interesting for those that are watching. We can lend in all 50 states minus New York and Massachusetts. We actually also lend in DC, so we have 49 different licenses, so to speak. I'm going to grab my eraser. My apologies if I'm going across the screen. So we just talked about refinancing into a lower term. We're going to come back to that right at the end. But the other thing you can do, if you don't feel like refinancing, maybe you've got a really low rate right now, right? And you don't need to pull out any equity. You're down in the low 3s or low 4s, and interest rates are no higher than that. Well, what else can you do? Okay, the second thing you can do is buy weekly payments. Okay, bi-weekly payments. Let's think of it this way. Let's just say there's 4 weeks in every month. On the 7th and on the 14th, I want you to make half your mortgage payment on the 7th, half your mortgage payment on the 14th. What this essentially does is, because there are 52 weeks in the year, you end up making 13 total mortgage payments as opposed to 12. It's just how the math works. And by making that one additional mortgage payment per year, even though it probably won't feel like you're making an extra mortgage payment, because you just get in this rhythm, 7th, 14th, 7th, 14th. By making that one extra mortgage payment each year, some people have cut off as much as $25,000 to $50,000 from their mortgage. Now, these are estimates. If you want to know exactly how much biweekly payments can help you pay off your mortgage, you got to call us, okay? Because everybody's payment's different, everybody's interest rate's different, and everybody's existing principal balance is different. So these are just good rules of thumb. Biweekly payments. Now, here's a word of caution. If your lender is going to charge you to set up biweekly payments, or they tell you they don't allow it, there's a trick that we can teach you that basically entails you going and getting a separate checking account. Go to your current bank, get a checking account, put a full month's worth of mortgage payments in that checking account to start, and have auto draft out of that account every single month on the 1st, have that pull out your mortgage payment. But you're going to pay into that separate checking account on the 7th and the 14th of every other month. You're going to pay half your mortgage payment on the 7th, half your mortgage payment on the 14th into that checking account. what will happen is by the end of the year, that checking account will have one additional mortgage payment in it, and then you can send that into your mortgage company. So it's a way to kind of work the system and not waste money on setup fees and stuff like that. Now, that brings me to number 3. Let's say you don't have the self-control or the ability to do biweekly payments. Notice both number 1 and number 2 I just talked about all have to do with one thing, and that is extra money. I know we all want extra money to your mortgage, okay? Anytime you can put extra money in towards your mortgage, and that's what shorter terms do, that's what biweekly payments do. Now imagine you get a tax return sometime at the beginning of this next year. Taxes are lower, you get a tax return because you've been paying more in taxes than you need to, or you get a bonus at work, grandpa and grandma send you a check for Christmas. Whatever the situation is, there are times in our lives where we have extra money. Now, most of us want to run off and spend it or take the family on vacation. All that stuff's fun. But if you're really trying to get ahead of the rat race and pay your mortgage off faster, whether it's $100 or whether it's $1,000, every single time you send that in with your mortgage payment, anything over and beyond your minimum mortgage payment goes directly towards your principal, and in return pays your mortgage off way faster. It's highly underutilized, and more people should do it. And that's where I'm going to end today. Here's some data that we dug up on the internet. The internet's a great place to go and get random pieces of information, but this is valid information. If you're a coffee drinker, it's likely you're spending roughly $3 a day on coffee in the United States. That's what the average coffee drinker spends in the United States. $3 a day. That's almost $100 a month. Take 30 days in a month times 3, that's $90. If you simply force yourself every time you buy a coffee to put an extra $3 towards your mortgage, at the end of the month, that's an extra $90. Did you know if you start packing your lunch and taking it to work, it is suggested that you will also save about $100 a month. So by matching your coffee cost and bringing your lunch to work, there's an extra $200 per month that you could start putting towards your mortgage. Do we have a question?
Justin just said, I appreciate you guys posting these videos each week he watches.
Justin, I'm not sure if we know you personally or not, but we appreciate your kind words. We appreciate you watching. You know, we are told that consumers, veterans and civilians alike, are going to videos much more than they used to. And so that's why we really love these platforms, whether it be Facebook, YouTube, Instagram. We know people like listening and watching content. I know it's not me, it's the content. So Justin, thank you very much. So again, guys, the trick here, talk to any financial guru, Susie Orman, Warren Buffett, Mark Cuban talked about this recently on an article that I was reading. Most people that understand finances understand that debt is no bueno. Debt is not a good thing, even though we all have to borrow money. Here I am, I own a mortgage company. I had to take out a mortgage to purchase a home. So debt isn't bad if you use it correctly, but the sooner you can get out of debt, the better. And I hope that those 3 or 4 keys that we shared today give you some ideas on how you can get that mortgage paid off faster. Do we have any other questions? Okay, thanks for watching. This is Eric.